I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with a special guest, our in-house crypto expert, Mr. Chris Curl. This is the 264th episode of our weekly therapy session that we like to call Investing in Bizarro World. We got a total eclipse coming. We got escalation in the Middle East that the markets aren't taking too kindly to. Record high prices for gold. A lot of juniors making big moves, copper surging, and a heck of an opportunity in the crypto space, which is why we have Mr. Curl on here today. So a lot to get to. Let's get to it. Chris, as I always ask, Mr. Hodge, how are you doing today, sir?
I'm doing well. Looking forward to the Bitcoin halving coming up on April 20th. And as is always the case when I show up for Nick, I am the stand-in for the grumpy white guy in Spokane. So I'm reporting for duty.
Well, look, you check some of the boxes. I don't know about the grumpy box, but you definitely are white, and you definitely are in Spokane. And so you do have a bigger smile on your face than Mr. Hodge typically does, though. So you have to work on that a little bit. It's more serious pontificate face.
Scour a lot more. Yeah.
I like it. Well, listen, let me get to the part of the market that has me really excited. It's my, knitting, my bread and butter, where I make the bulk of my money, and that's in the junior resource space. We have been waiting for what we call a super cycle, which, these things come around every decade and a half. And we had signs and showings of certain sectors. Lithium ran a lot the last year and a half, then consolidated for 9 or 10 months. Uranium had a great first leg up, then consolidated. And now, however, the stars are aligning, which is, again, pardon the cheesy pun, but with the total eclipse coming, the stars aligning in the resource space couldn't be any clearer to me. Copper broke out above the $4 level, currently at $4.15. We'll talk about some of the fundamental drivers there. Lithium appears to have absolutely bottomed and now is ticking higher every week. That looks like it's poised for a pretty violent turn higher on the equities because they were absolutely taken to the woodshed. Gold has made brand new highs 2 months in a row, breaking the $2,300 level, and silver is finally acting like a precious metal as opposed to an industrial metal after breaking the $27 level. Now, this is April the 4th, Thursday, when we record this, so I will caution and say, even in super cycles, you're not going to get a straight move higher, folks, and so we're seeing the Dow right now off some 524 points. Not clear as to why yet. However, there are rumors of an escalation in the Middle East. I've always said that election years, fourth turnings, and just where we are historically, we're absolutely due for more geopolitical tension than less. So that wouldn't be something that would be an outlier for me, but it's definitely something to watch as capital is going to flee the big overall indices if that is indeed the case. I think the resource space is going to be a beneficiary of some of that capital because, frankly, we've seen very little speculative capital in the resource space. So why is Mr. Chris Curl here? Mr. Chris Curl is here because a lot of what he does is really an analog to what Nick and I do in the resource space. And that is, we try to mitigate risk. We try to find opportunities that can bring us 5-fold, 10-fold, 100-fold returns. And we put our money where our mouth is, right? And Chris has been extremely successful at doing that for not just himself and subscribers, but frankly for Nick and I, right? We gave you $50,000, Chris, of the company money and said, hey, see what you can do with it. And last time I checked, it is at what now, Chris?
It's over doubled so far, and we're still very early on.
And the very early on part is key. So I touched on all the commodities and then them breaking out. The part that's got me excited, Chris, is this past week, for the very first time in the junior resource space, I've had companies in my portfolio surge 100% this past week, 70% this past week and a half, 50%. I mean, these are companies that were no-brainers, and I'm not going to say some of those names because this is the part of the cycle, folks, where you'll still get some of those from this podcast, but it's going to be less and less because you really, if you're dabbling in this space, should be spending a couple of $100 or $1,000 or $2,000 on newsletters to get not just the picks, but the whys and the strategy and how to mitigate that risk. this is the part of the cycle where a lot of money is made quickly, but it's also the part of the cycle where a lot of money is missed out on if you're not allocated and positioned correctly. And I think, Nick and I, for the past 8 to 12 months, have been begging everybody to get positioned ahead of it, to use the consolidations and the weakness in the pullbacks to bolster positions. And I hope that we've communicated that effectively. I hope, and I know Nick does as well, that people are seeing, the first 100, 150, 200% returns in their portfolios. There's a lot more of that to come, but I definitely wouldn't want people to miss out the opportunity to do that in the crypto space. And I know for novices like myself, right, Chris, I look at the crypto space and I say, well, Bitcoin is like a blue chip, right? And Bitcoin is like the like the US dollar. It's the reserve, the creme de la creme. But there are opportunities in altcoins where you've kind of, pounded the table to us and to your subscribers saying, look, we're going to get on a run here soon where the altcoins are going to be making 200, 500, 1,000% returns within a matter of weeks and months. And I would be doing our audience a disservice to not have you on here to go over some of the fundamental drivers there, what the opportunity is, and then, of course, how people can subscribe to Mr. Curl's cryptocurrency service, which is, again, I put that up against any crypto service in the space, and we got the returns to prove it. So, write in if you think you got something better. I'd love to have you all on.
Yeah, I'm really excited about the period of time that we're in right now in the market cycle, and really everything I've been doing for the last year has been in preparation for the next 6 to 8 months, where we've already seen Bitcoin hit a new all-time high. That was spurred largely by demand coming from the approval of the spot Bitcoin ETFs, and now you have Larry Fink and BlackRock, the world's largest asset manager, going more and more into crypto and blockchain. They just released their fund on Ethereum that seeks to tokenize assets. I think that they want to basically tokenize everything, which will result in people being able to buy tokenized, fractionalized shares of real estate, artwork, anything that is normally not very liquid, and with the eventual goal of probably having a tokenized stock market which trades 24/7 on the blockchain at some point in the future.
So there's going to be like DraftKings, but for every asset class where you take fractional ownership through a token. So if I want a Frida Kahlo painting and I can't afford $35 million for the one that I want, I can buy a token that is a fraction of that specific painting. That's kind of what you see developing here.
Yeah, I think that's the future of investing. Same thing as if you can't buy that oceanfront mansion in Malibu, you could buy part of it. I think that is the future. I think Larry Fink has finally come around to seeing that as the future of investing in finance. And he's trying to get that first mover advantage. If BlackRock can kind of seal the deal and get everything in place, they're just going to be collecting fees on all of this stuff that's set to happen in the future.
I hate to put you on the spot and crystal ball this, but when we talk about the future, right? How far in the future do you think this is? Like, do you think this is a next couple of years type of thing, or are we talking maybe 5 or 10 years from now? I mean, and when I ask that, let me be more specific. How far into the future when we first start seeing, the first asset class, whether it's real estate, oceanfront property, whatever, you name it, being tokenized or fractionalized, as I'm going to call it, because that's what it sounds like to me. It sounds like, they want, and I've been there, right? The people that, hey, maybe can't afford to give Chris Curl $50,000. They want those people to be able to go and, spend $200, much like a Robinhood did in its early days, which is why it was so successful, right? So this would be the token version of that, huh?
Exactly. Yeah, I would say my estimate would be within 5 to 10 years, you'd really see that. I mean, you already have services that exist for tokenized shares of real estate and artwork, but for it to really achieve mainstream adoption, I think within the next 5 to 10 years is probably realistic.
That's fascinating to me. And again, my brain goes to weird places. So I was watching a video earlier this week, Chris, and there was a gentleman in the casino in Vegas, and they caught like a video zoomed in on what he was
the
doing.
$20,000 deposit from his checking account?
That guy, it took 30 seconds, right? It took 30 seconds. He entered the information. He entered his financial institution. He transferred $20,000 immediately into essentially the machine he was playing in the front of it, and got right back to pressing buttons, right? And not eating and looking, strung out. So do you envision something like that in the future? Because I'm seeing it with I joked about DraftKings, but it's actually a serious thing. I'm seeing that same kind of business model being applied to online gambling now, right? We used to have such strict laws 5 or 10 years ago, and now I can't watch a Cubs game without it asking me to bet whether or not, my favorite Cubs player is going to hit a home run, or are we going to get out of the inning without giving up a run? And I don't think it's healthy. I think it's the gambling version of what social media does to children. I think this is the adult way where you get poisoned, and I think a lot of fortunes are going to be lost, and we're kind of here to help people, gain fortune, not lose it. But you see something like that happening, like that kind of there in your face.
Maybe, yeah. I mean, there are already crypto gambling platforms that have done very well. One of which I had an early investment in personally and sold, and I'm kind of kicking myself at now because it has gone up many multiples from the time that I sold it. But yeah, that is very much a thing. Where you have platforms that essentially allow you to gamble on sports, as well as take on massive leverage positions on cryptocurrencies, which are already very volatile. So, some people take on massive 100x leverage on an altcoin, and sure, you can make millions of dollars doing that, but the vast majority of the time, I think it's something like 98% of the time, people who take on leverage positions on crypto end up losing everything. So it's a very risky proposition. But I think given the economic climate that we're in, especially with the younger generations feeling a sense of hopelessness and despair, they're just willing to go all in and gamble it all in an attempt to be able to actually afford any kind of a life. And I think that trend's only going to continue as kind of we're in this era of inflation, of monetary debasement, and where real assets like houses, health insurance, anything that's of real value is going up massively. The younger generations that are desperate to just try to have any skin in the game are going to be moving more and more towards reckless gambling, reckless leveraged positions on cryptocurrencies, meme coins, etc. So I think sadly, in many ways, that is the future.
Well, and Nick and I have touched on this, something, an issue that I'm very passionate about because I come from immigrant parents that work their ass off to provide opportunities for us. And, luckily I have, a kid brother that put himself through Harvard on a full ride. And luckily I'm successful. My sister's got her master's, and again, that wasn't handed to us. We worked our ass off as well. But I say that to say there was a time in this country where upward mobility just required a work ethic. And if you had that work ethic, if you had parents willing to work, and if you were willing to work and learn, and maybe not start out, here, you had a path forward for upward mobility. And something that I noticed with the youth today is that they, for the most part, if they're not inheriting money, if they're not getting here's a free condo head start, or here's $100,000 loan for a business, they don't see a path towards upward mobility because they're having to live with 3 of their friends just to make ends meet on a 1 or 2 bedroom condo if you want to live in a decent part of town. And if not, you're getting robbed by people that are even hungrier than you, right? Yeah. And so I think when you get in those kinds of scenarios, it can bring a lot of turbulence. And I don't want to turn this into a societal discussion, but when I do want, where I do want to take it is I want to ask you, how are you positioning yourself and your subscribers, Chris? And you don't have to give us specific names because it's not fair to paying subscribers, but how are you positioning yourself and subscribers to profit from this trend? Are there vehicles or coins or ETFs in place right now where you can take advantage of that in anticipation of the commercialization of tokens and fractional ownership and what you see coming here.
Yeah, absolutely. A lot of the projects that I've purchased and with the portfolio do enable a lot of this functionality. And one very obvious example is Ethereum as the preeminent layer one. That's what BlackRock has just launched their BUIDL fund on, which is their first attempt to kind of tokenize assets. So, I mean, really, Ethereum is a big player, and then multiple layer twos that are built on top of Ethereum that help it scale, because Ethereum has a major scaling issue where the fees get exponentially high for each transaction, and the network slows down. So that's why they've had to build kind of alternative chains on top of it and next to it to try to help with that congestion. And I don't know if they're ever going to totally fix Ethereum. They keep trying. Hopefully they will, but that is why we've also invested in a lot of alternative layer one blockchains that do what Ethereum is trying to do, but much faster and cheaper.
Again, my brain goes to weird places. So a couple of things. I touched on the fact that the market was down some 520 points. Gold rallied above 2,300. Then it pulled back. The dollar broke down. Then it evened up. And so I'm seeing a news story that says that Israel sees indications that Iran may launch missile and drone attacks from Iranian territory. Possibly on Friday, Israeli officials have informed the U.S. that an Iranian attack will trigger a response. So then where my brain goes, because I'm weird, is I go look up defense stocks. And on a day where the Dow is down 527 points, Lockheed Martin is absolutely surging. And if you don't know about Lockheed Martin, those are probably the missiles and bombs that are going to be launched and subsequently delivered. If that kind of escalation takes place, I really hope that's not the case. I've always said, be careful what you wish for as it relates to the gold price, because, $2,300 gold is fine. $2,500 gold is fine. If you can make money at those prices, then maybe you shouldn't be a gold miner. I don't want to see $5,000 gold if it means that the Middle East is completely carved out. It's bad enough to see what's going on there now, and what's going on, on all sides, but definitely the Palestinian side has bore the brunt of just the bombing and the displacement. I would hate to see that on an even grander scale for all humans involved. So hopefully that's not the case. I think obviously you'll get this on Monday, folks. You'll know what happened over the weekend, and I hope the total eclipse on Monday isn't eclipsed, again, cheesy pun, pardon it, but isn't eclipsed by the start of World War III here over the weekend. So back to positioning. That seemed too important not to mention it. I didn't want to forget, but back to positioning. So altcoins, what type of returns are you expecting? And you're doing this now, by the way, because I know we talked about the tokens and fractional ownership and asset classes in the future, but the altcoins that you're speculating on, you're doing that now. You talked about making, X amount and then missing on some of the gains by taking profits too early. So this is a now thing for that.
Absolutely. Yeah. And a lot of the altcoins, that I invested in back in, particularly the ones that I bought over the summer when we had that kind of market lull in the crypto space, many of those are up over 500%. And like I said, we're still pre-Bitcoin halving. After the Bitcoin halving later in the month, I think that's when we're going to get the really big surge higher for Bitcoin. And whenever Bitcoin does push to a new all-time high, that's when the altcoin market explodes, because people take profits and they convert them over to more speculative, higher risk altcoin investments, which yield much higher returns than Bitcoin can. And that's when you just see that, it really turns into a casino. But if you're invested in the right coins early enough, you can really ride them up for incredible gains. That's where I was able to get 50 to 90 plus X gains in the last crypto market. And I think it's important to point out for a lot of people who feel like they may have already missed out on the opportunity, the biggest gains that I had in the last crypto bull market, those were in the last quarter of the bull market. So it's not as if there isn't a lot of explosive profit opportunity left in the crypto space, even if you feel like, oh, Bitcoin's already hit new all-time high. I've already missed out. It's too late. It's really not, especially when you're looking at altcoins, because the risk-reward profile there is very high. It's extremely volatile. And the good thing is when you're at that parabolic kind of euphoria phase of a bull market, that's when these altcoins just really explode. So there's a lot of opportunity left.
Excellent. And look, this is a perfect segue for me to remind everyone, because Mr. Curl is one of our talented editors that brings you, weekly editorials free on the house, completely on us. If you go to dailyprofitcycle.com/subscribe, you can get Mr. Curl's, Mr. Hodges, my ranting and ravings, Mr. Stansel, Mr. Borquist, Mr. John Carl, a ton, Mr. Mike Fagan. I could go on, but a really talented group with different viewpoints on different parts of the economy and in the world. And, again, it's free. You'll get your money's worth. If you don't like it, unsubscribe. But I encourage you to subscribe, because I think there's a lot of money to be made. There's a lot of analogs to the altcoins that you mentioned in the juniors. I mentioned those moves this week. And I think it's important for me to reiterate to those that are maybe watching this for the first time or aren't just familiar with, kind of my speculation style. I tend to be aggressive. I'm very high risk. I'm very high reward. When that works, we get a 10,000% win like a Patriot, and when it doesn't work, we could be down 70 or 80%. And often, like with Patriot, you're down 50% one month, and the next month, all of a sudden, you have a triple-digit winner. It's the nature of the space, but there are ways to mitigate risk. And I'd like to think, as we mature a bit and we do this and then win and lose a little bit more often than when we were young, that we have better systems in place to help mitigate that risk. And look, for anyone that thinks that gold's at 2,300, I must have missed out on the gold equity boom. Absolutely not the case. While we're seeing certain stocks rally, there is so much runway here. This is a market that World War III or not, and really I hope not, folks, but we have a couple of years at least of runway in the gold space, because the system is fundamentally and structurally flawed, right? We have $34 trillion in debt. We're adding, just insane amounts of money to the deficit without any clear indication that there's a sensible way out of it, because there's not. They could tax the rich as much as they want to tax the rich. It's never going to suffice until they restructure the system. Gold is a heck of a hedge to have in place for that. The gold equities associated with those, especially the better ones, are going to have incredible runs. Copper, same for copper. Sure, a lot of positions were up 40, 50% this week. They are coming off such a depressed baseline that the amount of upside that's left, there's a company that's got an asset with a pre-feasibility study or a feasibility study with $1 billion asset at today's prices. It's got a $23 million market cap after a 50% move this week. That's the disconnect, folks. And so should it have $1 billion market cap? No, of course you discount, the CapEx and the cost of production, all of that. But it shouldn't be a $23 million market cap if it's $1 billion asset, right? I don't have to be the brightest bulb in the box to figure that out. So the disconnect very much still exists. It's there in lithium. It's there in uranium. Definitely there in gold and copper. It's there in silver. Some of the better silver pure plays have surged. But again, I have one that's up 100% this week that owns an entire silver gold district, and they're up 100% this week and have a $5.5 million Canadian market cap. This is a company that if it succeeds with the drill bit and it's a past producing district, I think is a $200-400 million company. So you can do the math, coming off a $2 million market cap to a $300-400 million market cap within the next couple of years. That can be very profitable, especially if you're using the leverage of, a warrant, if you happen to be an accredited investor. And are able to participate in those. So, Chris, I think it's been insightful. Definitely major catalyst. We got the halving happening, right? That is this month.
It should happen on the 20th, 4/20. It's very good date for the Bitcoin halving.
I like it. Going higher on 4/20. I couldn't have written that one any better. Anything else that people should really be watching?
Well, pay attention to how successful these Bitcoin spot ETFs are, how the inflows into these spot Bitcoin ETFs since their approval has been massive, far exceeding any previous ETF. I think that the gold ETF in 2004 was the most successful one prior to the Bitcoin ETFs. And we all saw what happened to the price of gold in the 10 years that followed, went up roughly 7x. So keep a close eye on that. Keep a close eye on what BlackRock, the world's largest asset manager, is doing, and what Larry Fink is saying, because those people have a lot of influence and they're going to dictate a lot of policy moves, especially from the SEC, who has been hostile to cryptocurrency. I think Larry Fink has the bigger stick than Gary Gensler, and he's going to get what he wants. So prepare.
Well, sometimes the person with the bigger stick gets what they want. It's definitely it's definitely better to have the bigger stick than not, folks. I'll leave that one there. Chris, it's been insightful as always. That's fingers crossed that we don't have an escalation that does nothing but enrich the defense contractors that are surging year after hours, and punishes everyone on all sides. I hope everyone has an amazing, amazing April. Have an amazing week. I am Gerardo Del Real. This was Mr. Chris Curl on the 264th episode of what we call Investing in Bizarro World. Chris, thank you again, sir. Appreciate it. I encourage everyone to go to dailyprofitcycle.com. Check out Mr. Curl's editorials, and there's links there to his service if you're so inclined. If you're dabbling in the crypto space, there's no way that you shouldn't be subscribed to Mr. Curl's service. Y'all have a good one out there, folks.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.